Ladies and gentlemen, we bring short-term forecast for the U.S. stock market. The market is likely to continue rising slightly in the short term, but with potential volatility due to external risks. Thank you for reading our news. Please like and follow us for daily news updates. Investor sentiment is improving thanks to positive trade news on May 8, 2025. All three major indices, Dow, S&P 500, Nasdaq, rose after news that the U.S. and the U.K. reached a new trade agreement, easing import tariffs on certain goods, especially in aerospace and consumer sectors. President Trump also signaled upcoming negotiations with China would be broader and higher quality, which helped reduce trade war fears and sparked a market rebound, especially in previously affected sectors like industrials and energy. Strong earnings season boosts confidence. Over 80% of S&P 500 companies have reported Q1 results, and more than 70% have exceeded earnings expectations. Major tech and industrial players like Apple, Alphabet, Boeing, EPAM Systems, and Enphase Energy all reported solid growth, reinforcing confidence in a sustained earnings recovery. Capital is flowing back into stocks. Volatility, VIX, continues to fall, and ETFs are seeing renewed inflows, particularly in tech, energy, and crypto-related sectors. Bitcoin recently broke above $100,000, driving strong gains in related stocks like Coinbase and Marathon Digital, encouraging a FOMO rally. However, short-term correction risks remain. Valuations are stretched. The S&P 500 P/E ratio is above 20, higher than the historical average, 16 to 18, making the market more sensitive to negative surprises. The Fed left rates unchanged in early May, but warned that inflation risks remain due to trade policy and tariffs. If upcoming CPI data, due May 14, exceeds expectations, the Fed could shift more hawkish, pressuring stocks. A stronger U.S. dollar and rising bond yields, out of 4.4% for 10-year treasuries, may also weigh on tech, real estate, and utilities. Very positive. U.S.-UK trade deal eased geopolitical concerns. Positive. Strong Q1 earnings beat expectations across multiple sectors. Positive. Market liquidity improving with ETF and crypto-related stock inflows. Neutral, negative. Valuations remain high, raising risk of pullbacks. Risk factor. CPI inflation data, May 14th, could trigger Fed hawkishness and short-term volatility. Short-term outlook. Stay cautiously optimistic. Take profits on overheated sectors and closely monitor macroeconomic data and Fed signals.